Good afternoon, everybody, and welcome to our EGM Securities update. Today, we're going across border. I've got Gaurav, the head of research at EGM Securities. Gaurav, it's a pleasure to be speaking with you today.
Very happy to be with you, Ali.
I was hoping we could start off with the news coming out of the US that Canada and the US have finally agreed to a new trade deal. It obviously had a big impact on the currency. Can you tell us a little bit about how you're reading the situation?
Absolutely. Well, we see a very last-minute deal come in late on Sunday night, which saw some updated terms to the current NAFTA agreement between the US and Canada. And it seems like these terms and conditions were seen as favorable, as we've seen the Canadian dollar move about 0.8% higher against the US dollar in trading today. Overall, if you look at it, the markets have received this news on a very, very positive note, seeing a lot of risk on sentiment driving markets higher. But if you look at a little bit about the details of this deal, we've seen Canada make some concessions with regards to dairy products. In return, the US has promised to give caps on the automobile industry with regards to Canada. And again, this has seen a lot of positive momentum coming into Canadian asset classes. Overall, this may create a bit of a buy momentum craze in the Canadian dollar in the next few days. Currently, the Canadian dollar is trading at about 1.28 levels against the US dollar. I would look for traders to particularly look at a target of maybe 1.26 levels in the next 1 to 2 weeks. But overall, definitely the momentum has been moving in favor of the Canadian dollar.
Do you think we should take away anything with respect to the big head-to-head tariff war, which is with the US and China, or do you think this has no impact on that?
That's a wonderful question, Ali Khan. In fact, your answer would be as good as mine. To be honest, we've not seen the full depth and full sell-off as a result of the trade wars. This can be seen as a bit of a minor victory in the current trade war scenario. This overall does not change the overall trend and risk-off sentiment, which is driving the US trade war story with China. So overall, no, I wouldn't say that this has a big change in that larger theme. So overall, we continue to wait for developments between China and the US to adopt longer-term trade strategies. But if I can just tie that in, for example, if you look at the state of the Australian dollar, the Australian dollar has been particularly susceptible to this ongoing trade war story, and the current trend for the Australian dollar continues to point downwards. If we look at some of the data that was released today, earlier in the Asian session, we had the release of the Melbourne Institute for Inflation Gauge, and that monthly gauge showed that Australian inflation came at 0.3%.
Gaurav, given the environment that you've described and characterized, how do you see, in particular, euro, which is the big beast in the FX market, euro dollar, and how do you see gold? Because a lot of people, it seems everyone's in two minds about gold. Some saying this is the buying opportunity of the century, others saying, it's the selling opportunity of the century. Where do you stand on those two?
Well, if we start with the former, if we look at the performance of the euro last week, it was an absolute roller coaster. It started the week on a very, very positive note, and then of course we saw the euro give up a lot of its gains through Wednesday when the FOMC came out with a rather hawkish tone, and we saw a lot of buying support coming into the US dollar. That weakness was also compounded on Friday when we had the Italian government coming out with their GDP to debt ratio at close to 2.6%. This, of course, well below the 3% mandate by the EU. But this, of course, rattled the euro forecasts in the short term. So what this means to me is that I continue to see weakness coming into the euro. While we do not have any major pieces of data this week which could drive a euro sentiment, I am expecting to adopt a bearish sentiment in the euro, particularly against the US dollar. Look for a target of probably 1.1550 for those intraday traders. If we move on to gold, gold has been extremely uninteresting. It's been very, very range bound in that range between 1180 and 1220. To be honest, I don't see the gold trade as a hedge against inflation really in play here as we had seen it a couple of years ago. Overall, I expect continued dollar strength to weigh down gold prospects, And again, if I would see a good cheeky trade in the next week, I would look at probably taking short positions in gold with a downside target of about 1180 levels. But overall, Ali, I think the trend is to remain dollar bullish. I'm expecting to see good upside movement in the US dollar index back towards those 96 levels. Look for gold again to go to those 1180 levels. And finally, one interesting emerging market currency which we continue to keep an eye on is the Indian rupee. That also will create some opportunities going forward. We've seen the Indian rupee top out at a historic high of 73 against the dollar. Currently we see it at about 72.80 this Monday morning. Look for further moves up to that 73 handle, at which point it would look wise to again look at selling at that 73 handle. But overall, yes, the theme does remain dollar bullish, at least for this week.
Pleasure speaking with you, Gaurav. Thank you for making the time. It's appreciated. We'll watch how things pan out and look forward to speaking to you again.
Great speaking to you, Ali Khan. Have a great one.